For more on that, we're joined by Horst Löchel from the Frankfurt School of Finance and Management. Some EU economies, like Germany, for example, are still quite healthy, while others are certainly in a very dire situation. Does this imbalance, though, itself pose a threat?
Yes, of course. It's a real threat for the European Union, not only the differences in the sovereign debts and the government debts, but also in the performance of the economic development, which is much weaker in the south of Europe since the financial crisis in 2008.
But is this where we're seeing a branching off of two different parts of Europe suddenly?
Yes, of course, we see that. I mean, we have now the south, with the weak economic development and high government debt, and the middle, especially Germany and France, but also the northern country with a strong economic development and much less government debt. And this is very, very dangerous for the development of the European Union.
Where could it leave the European Union?
I mean, it could lead to, in the end of the day, to a break-up of the Eurozone because of this high divergency of the developments.
What about Spain? Where would it leave Spain as far as something like brain drain goes?
This is right. There is a kind of a brain drain from Spain to Germany, for example. I think this is a good development because this is the same in Germany or in any country. Sure. If you have weak regions, this is fine if there is if the labor and capital can move from the weaker to the stronger parts. I think this is a healthy development for Europe, but it's not really a strong development. It's only individuals, but not really has not a really strong impact, for example, on the unemployment rate in Spain, which is still above 20% or so.
You mentioned bonds before. The economic imbalance in Europe becomes very clear when we look at the yield on government bonds. 10-year bonds from Germany still have the lowest yield. You can see the rise for French bonds, but that's nothing compared to Spain and Portugal. The yield for bonds from Portugal stand at present at nearly 12%. This is obviously aggravating the situation. Can anything be done to solve the situation, though?
This is right. It's a very unhealthy situation. And at the end of the day, Spain will not get ready to pay back the loan because it's very simple. If you have interest rates above 10%, you have so high interest payments to the bank and other creditors that you are not able in the long run to pay back your debt. I think the only solution of this in the end of the day will be Eurobonds.
How would that change the situation?
Yeah, because in Eurobonds, then you have a collateral of different countries. That means there's an issuing by the European community or by the countries of the Eurozone. They issue the bonds. That means they also take the risk of these bonds. That means if you buy such kind of bonds, you have also, let's say, the guarantee of the German government for Spanish bonds, which makes it much easier to invest in Spanish bonds, of course.
Okay, thank you very much for the insight, Horst Löchel.